Okay, here we go. I think we're recording. Angie, do we look good?
You look good.
Okay, perfect. This is Michelle Garcia, and we're doing a Zoom. I'm with Windermere. My website for reference is LakeCDA I've got a few people on the line here, and I wanted to do a little talk with Janie Roth, hi Janie.
Hi, good morning.
And Janie's with STCU. I'm going to pull up her website here. I've got Angie helping me, so I might rely on Angie for some technical things. But in general, I think we're good. So Janie, I wanted to chat with you about. Just things are crazy right now, right? We've got this COVID-19 thing going on. Obviously, if for anyone out of the area or who doesn't know us, we're in the Coeur d'Alene, Idaho area. So that's the Panhandle region of northern Idaho. We're just about a half an hour or so away from Spokane, Washington. In the time of year, what is this, April 2nd, right?
Yep.
And we're in the height of all this COVID-19 stuff. And I just wanted to chat with Janie, who's one of my good friends, but she's also a professional with STCU, and she has been in the lending business for a long time. And so Janie, I'll ask you to kind of give a little bit about your background first, and then we can kind of chat about what's happening in the world and how do we maneuver through all this COVID-19 stuff.
Sure.
So tell us about you first.
Yeah, I'm Janie Roth. I'm the home loan sales manager for North Idaho for STCU. I've been in the business both on the real estate side and lending side since probably about 1998. So I've been through a couple of these ups and downs through real estate and lending, and recently just took on a team with STCU where we work with externally. So that means we work with referral partners and realtors, and we just built our team this year and are out there and staying busy and working for STCU. So it's been a great market these last 2 years, and we're excited about this summer. I think it's still going to be a good market, even through these challenging times that we're kind of going through right now.
Yep, I can see that. I think all of us can. So also, by the way, we have Dave Davey on the line. Hi, Dave. So, yeah, and just when I first met Janie, I learned that she was a branch manager for, was it U.S. Bank or Bank of America?
No, it's U.S. Bank, yeah.
U.S. Bank, okay.
Yeah.
But anyway, we had a lot in common, so we kind of hit it off. But we've done more than a few deals together too. And I know Janie knows her stuff, and you just what is your official title? You got promoted to what?
So I am the home loan sales manager for North Idaho for STCU.
Okay.
So I cover, all of North Idaho, and
Nice.
Of course, too. So we do loans in Washington and Idaho, and I think Oregon as well. So, but it doesn't really affect our business up here too much.
And of course, I only handle Idaho, so I don't know what's happening over in Washington very much, other than just, anecdotally talking to colleagues and things. But I would love to hear from your perspective what's happening in the lending field and COVID-19. How is this affecting the business overall?
Sure. STCU has this, phrase that we always say, we're here for good. And I like to say that because we are here for good and we are open for business. So we are one of the essential businesses. So we're still running along just as smoothly as before. There have been some changes in lending and in what we call the secondary market, our guidelines that we go with, we go by through Freddie Mac because of COVID, because it has changed a few things. And some of the things that you and I have talked about is, a lot of people are losing their jobs during this time. Will that affect?
Right, and it's just temporary though, right? Like that's the hope, but how does the bank handle that when
And it
it's
really
uncertain.
depends. Yeah, I mean, if it's uncertain, you do have to have a job in order to get a loan, unfortunately. If by the end of the loan process, you are back into work and your job is considered to be ongoing for at least, the next 3 years, or you'll be in employment, then of course you'll get approved. But they are checking a little bit closer now. FHA, the government loans are checking 1 day before closing to make sure that people are still gainfully employed. So really, I think if you are in the process and you have lost your job, or if you're just on a temporary leave of absence, it really depends on what the reason for you, it has a business shut down completely. Will it be coming back? What type of business are you in and how you are paid? All of that really, varies per employment. So, and that will vary per approval too, so it's, I know it sounds very vague, but
It kind of has to be, right?
Mm-hmm.
Because
I
it's
mean,
on a
it's
case
really
by
kind of a
case,
case
or
by case, yeah, case by case scenario, basically.
Okay. And so that that makes me think about, if someone's in the process of purchasing a home and they're going to verify employment, as short as a day before the deal closes. Oh my gosh, can you imagine? Like the day before you're supposed to close. I mean, everyone's should be packed up and ready to go, moving trucks all ordered and everything, right?
Yeah.
I mean, are you actually seeing that happen, like where things are not going through, or?
I haven't personally seen that myself. Right now, what general guidelines are 10 to 5 days before closing. FHA and government loans some investors have moved it up to 1 day before closing. Again, it's per lender and per investor. But yeah, I'm sure it happens. It's happened before though, too, before the COVID. If somebody loses their job before closing, then we can't close on the loan.
Right.
So that really isn't something that is new per COVID-19, but I think it might happen more frequently now based on your employers.
Mm-hmm. If now that we have the new stimulus package, it's be coming online tomorrow for people to get loans and everything. My understanding of the way that was intended is that the business owners, they would continue to pay their employees even though they can't work. An effort to have all their employees when we're over this, we can restart the economy, right? So in a situation like that, any idea what that might do to somebody that falls into that category? I would suspect that they're still being paid, they're still an employee, and so they're just like they always were, continuity of everything, right?
Yeah.
Great.
So, I mean, if we verify the employment and you're still receiving paychecks, I know my daughter has been out for 4 weeks and she still is being paid by her employer. So she's still employed. So you're still really employed at that time. If your business shuts down or you're laid off and you're, unemployed, that's different. So that was a good question, Dave.
Yeah. And also, what about on the business owner side? How is that looking?
That starting, I think it's April 14th. Let me look at my notes here. Yeah, April 14th. Guidelines have changed a little bit on that end, just because of the COVID-19. Businesses are shutting down. So we do have to verify that the business is open and it is actively doing business. And, you will verify that through like invoices or accounts receivable or, a phone call verifying that the business is open and running. So there has been a little bit different guidelines put together for businesses. And this is something that we will do 10 days before closing now. Whereas before, we pretty much just went off of their financials. So, and made sure that the business was in business. Of course, we checked that, but now it's being verified through receipts and invoices, business, appointments or estimates that you can see based on what kind of business.
Sure.
So
Yeah,
that,
I mean,
that will be changing.
I
Yeah.
can imagine. I mean, there was one restaurant downtown, they were saying they lost 90% of their business overnight, you know, when they had the what do they call it? Shelter in place order. So, yeah, scary stuff. Okay, well,
I have
Yeah.
one more question.
Sure.
In regards to some of the changes that have already occurred and maybe what you see, you could forecast down maybe the next few weeks or whatnot. How are the requirements and stuff changing for a debt to income ratio or minimum credit score? And have you seen those change and new things been in place yet, or what do you anticipate?
The only area where I've really seen the changes are through our FHA and VA and USDA guidelines. FHA has increased their credit score, where really if you had somebody that was a little more credit challenged and maybe had, not lower down payment, we would kind of look at FHA for those borrowers. Well, now the credit score requirement is now 680, where it used to be down to 620 or 600, depending on the investor. There also rates have increased in that, in FHA and VA, and also they're doing the one-day verification of employment. So that is where I've seen the biggest change. As far as our personal, STCU and our guidelines, we're running along just as business as usual. We're going through the same verifications, and of course, any any new guidelines that come through from our secondary market, which we use Freddie Mac, we do have to abide by those guidelines. And those are some of the ones I just talked about earlier with self-employment and, the verifications that we're doing now that will start actually April 14th.
so the lending requirements are tightening.
I haven't seen any tightening of lending requirements, just more verification of employment, I would say, because I think that's the biggest unknown out there.
Mm-hmm.
Will people have jobs, and will businesses, self-employed businesses, still be able to stay in business if they are wanting to buy a house right now? So I think that is where you'll see, maybe some things start to change a little bit. But as far as credit guidelines, and I haven't seen anything come through on that end.
But did you say though that 680 was the new requirement for, what was that for? I missed that.
For FHA.
Okay.
FHA. Yeah, and that's through our investors. And I did speak to another lender yesterday, and the same thing. FHA loans minimum requirement now is 680 credit score.
That's a big difference, isn't it?
Yeah, that's a big difference.
FHA was kind of meant for the people who were a little bit of a lower credit score, I thought, right?
Right.
Okay.
So, and these may be temporary changes. So we just have to see, this is, as it's moving and changing daily.
Right.
So it's, it's something that we look at. We get notifications from our underwriting manager on if we do have changes through our secondary market, which is Freddie Mac. Then we get those changes and when they will be implemented, and so that we're prepared when we do have some borrowers that come in that might those guidelines.
Okay. And what are we running right now for interest rates?
Oh gosh, they're kind of all over the board.
Okay.
Daily they go up and then they come back down. They go up and come back down.
Well, you had a big giant refi boom, right?
And we did, yeah. And then they went right up after. So it's so they're very volatile right now. So depending on the market, and how the stock market and the financial markets are up and down as well. So right now rates they're really good between, a kind of a range between 3.25% and 3.5%, depending on qualifications and what you qualify and loan and, but that's
so many variables, but in general.
Yeah, there's so many variables that go into quoting rates. I don't really like to quote like direct rates, but generally that's kind of where they're falling in, is between 3.5 and or 3.25 and 3.5 up to 3.8, just depending.
So we're well under 4. I mean,
We are today. Now Friday
right.
is a story. So like I said, they're
Okay.
all over the place.
Still,
So
I mean,
just, talk to, your lender or whoever, or talk to me.
right.
If you're interested, then we can kind of, lenders like to get with the person and really
Sure.
based on their qualification, because there are so many variables that go into a rate.
Sure.
So great. So that's what I want to put out there. Rates are still, I mean, gosh, when I bought my first house, they were 8%. So
Yeah.
4% is great,
I know. Seriously. 4 point anything, still good. I mean,
yeah, right.
it does make a big difference in what people can qualify for, right? But
it does. Yeah, it does. I mean, there's so many variables that go into it that really it's hard to put out a general rate out there.
Mm-hmm.
But just to know, they're in the mid 3s to the 4, and they're still very low. And you can always go to our website, stcu.org, click on rates, and get the most current rates.
So let me do that real quick.
While you're doing that, Michelle, I'll ask Janie another question. With the new kind of scrutinization and changing of, debt to income and all the different stuff that's going on, specifically on the FHA and loans like that, how is that affecting processing time, and what should people expect if they enter into a contract in terms of, maybe they bought a house 3 years ago and it kind of went normal? Is it still going to go normal, or should that be extended, or what would be the
I mean, we're still closing. Our turn times are still very good. We're closing loans between 30 and 45 days, just as normal. I think one of the things that are really helping us is we're seeing a lot more appraisal waivers for purchase and refinances, because I think with the current environment, of having an appraiser come out to the house, I think that they've really, through our, what we call our loan product advisor system that we use, we're seeing a lot more appraisal waivers come through, which will speed up the processing as well. If you don't have to wait for an appraisal,
that's true.
You're processing. So that's really helping. Right now we are in a refi boom. So, we're very, very busy, as I'm sure everybody is very, very busy. We do put purchases first. So we do take those as a priority so that we can get those closed on time.
Sweet. Okay. You mentioned something about on STCU's main page, a little relief. So tell us about this.
So you're on our page right now, I can't really see financial assistance. So anyone who is a member of STCU and they are experiencing some hardship, we do have some relief sources available. If you go to stcu.org and you're right there, it shows you relief for businesses. If you're having a hard time making your payments, we do have what we call our Financial Relief Solutions Department that will help you through any hardships you may be having at this time.
So now I've heard, Janie Roth, that what was the deal? I don't know the term you guys use for it, but essentially like a little mortgage vacation for a couple months is possible. Is that just institution by institution, or is that across the board where you can add on? I actually had someone tell me they've done this, not just they heard about it. They've done it with their lender where they took 2 payments and just added it to the end of the loan. And so they have, these next 2 months where they don't have to make a payment.
So that's a mortgage forbearance, and we do have that for our members. You just need to, again, go to stcu.org, and there is a section on there that you can get assistance with that.
Okay.
All of our information is on our website, and if you need help with, making credit card payments or making your home loan payment or auto payment or any type of relief that you need, we're here to help you. So the best resource that we have is either call our contact center or go to stcu.org and look at that financial relief.
Okay. And then let's just talk about loans in general. So you guys do FHA, VA, all the
USDA.
government, USDA. Oh, you do USDA?
Yeah, we do. Yeah.
Oh, okay. And then the regular conventional, right? So conventional standard loan, how high can you go before you get to the jumbo level?
Gosh, I think it's 510 something. I'm not
around there somewhere.
It's around 510. Yeah.
Okay.
They always put like it's like different, 510. Sure. So it's up to around 510.
Okay.
And as far as our conventional, we do have some portfolio products that work really well for borrowers, that maybe don't want to go FHA or USDA. We have our first-time homebuyer program that only requires 3% down, based on qualification, of course. And then we have a zero down program too, and that's based on qualification as well. But those are two programs that, STCU has that can really help, first-time home buyers or people who just haven't really had the time to save up their 20% down.
But for a regular conventional loan, what are you, like 5%? Or I know 20%
5%.
is pretty typical for the best rate, right?
Yeah, for 20% down, is great because you don't have mortgage insurance, private mortgage insurance added onto your loan. Anything that's less than 20% down, you will be charged private mortgage insurance or mortgage insurance. And as far as guidelines for Freddie Mac, you can go as low as 5% down, for a conventional loan.
Okay, but your best rate's going to be with the 20% down.
Yeah, I mean, of course, based on qualification,
Sure.
Of course, there's different things that go into the best rate, not just your down payment. It's, your credit score and, your what we call the debt to income ratio, how much debt you have compared to the income and the new payment you want to make. So all of those kind of pull into the rate scenario, which is why it's so hard to directly quote a rate and put one out there.
Sure.
So, but at 5% down is the minimum for Freddie Mac. We also have another program that's kind of nice for people who don't have that 20% down but don't want the private mortgage insurance. Is we have a 10% no MI, so no mortgage insurance program that you can based on qualification that you can use to purchase a home as well, which is kind of
sweet.
Want that extra mortgage insurance.
Yeah, which is a big deal, right?
Yeah.
I mean,
yeah,
it ends up being
really
a lot.
saves you some money. Yeah.
Okay, cool. Dave, anything I missed?
No, not at all. But a couple quick questions, just since we're in the kind of general loan category now. At STCU, do you guys do your own underwriting in-house?
Yes. Our headquarters are right in Liberty Lake. We have our processing and underwriting. We also service all of our conventional loans in-house. So your loan, if you do conventional, stays with STCU, which is nice. I know a lot of people love that because they want their loan to be sold 3 or 4 times to different servicing, companies. So that's one of the nice things about STCU as well.
And what about land loans?
We do land loans. They do need to be what we call improved land. So they do have to have a water source on there. It's a 5-year balloon amortized out for 20 years. So your payment is based on a 20-year loan, but in 5 years, you will have a balloon payment unless you roll it into a construction loan. And again, based on how many acres, it requires either 25 or 35% down.
Okay. And do you guys do manufactureds? I don't know if we've talked about that.
We do manufactured on real property.
Right.
So they have to be permanently affixed. Can't, they haven't, if, they can't have been moved.
Sure.
They also have to be after 1976. So.
Okay. And are the down payment requirements similar to, like, is that considered a conventional loan, or?
You can go through FHA, or you can go through, we do have a conventional product at STCU where it just requires 5% down.
For the manufactured?
Right.
Set as real property with the other things you talked about. Okay.
Yes.
Oh, sweet.
Yeah.
Okay. I mean, that's becoming more of a thing, I think. So
Yeah.
for some people, especially if they want to be on property. And some of those newer ones are surprisingly nice.
They are nice. They are nice.
So, all right. Let's see. I think I covered everything, Dave, unless you have anything else.
Yeah, it was great.
Okay. Is there anything else you wanted to add, Janie?
Oh, to me. Okay. I thought you were talking to Dave. No, I think that I just kind of wanted to get the word out there that we are open for business, doing business as usual, and that we are also there to help our members in this, time of uncertainty and these challenging times. And if you have any questions about anything, please feel free to reach out to me anytime. I'd be happy to answer any questions.
Awesome. And then, by the way, I have gone to this page, but didn't say it out loud. So is it stcu.org/Janie Roth or
Janie R.
Janie R?
Yeah.
Okay. And so if this is where people can apply, right?
Yes, you can go on, and that's the nice thing is one of the reasons why it really hasn't affected our business is because everything is pretty much online now.
Yeah.
Signatures, electronic documents, and you can apply for a loan online. And I just closed a loan with a gal from Minnesota that's
nice.
So, and
nice.
Met her, but had a great relationship with her, and everything was done either over the phone or online. So it's definitely possible to still buy a house and close on a loan through the COVID-19.
Right. Awesome. Okay. And I'm going to finish with, we're in the process of updating our website, LakeCDARealestate.com. And so I would love feedback on that for anyone who's listening. We're daily, I think, going to be modifying this until, we feel like we've got it where we want it. But yeah, this is our new site. Jared, Dave, myself, Angie's in the background. She didn't want to be on camera, but I don't know why. She's so cute.
She's very cute.
But one thing I want to point out, this North Idaho relocation guide is something that we've spent a lot of time on. So you can download that for anyone. You can share that with people who are from out of the area. It's super helpful with just telling about our area. And also there's a bunch of resources in there with phone numbers and contacts and things for everything from education, hospitals, voting places, and all the title companies, builders. There's just a bunch of resources in there. So I would encourage you to download that or send the link to someone if they're thinking about moving to the area. And please let me know if you've got any questions or if we can help you in any way regarding real estate here in the Coeur d'Alene, Idaho area. Janie Roth, thank you so much.
Thank you for having me. I really appreciate it. It was a lot of fun. So
I really appreciate you coming on, and I think this is fun. So this Zoom thing, like, we're all kind of doing business a little differently, but we're still operating and connecting with one another and helping people find their happy place, right? Look, do you like that? Helping you find your happy place.
I love it.
So, all right, guys. Thanks, everyone.
Have a good day.
Bye.